Hello and welcome back to the Cash Compound channel. My name's Jonah. I'm one of the banking bros here, and today's video is all about the kids. That's right. In this video, I want to highlight the absolute best way to put away money, to save money, so that your kids, your children, can have a better financial future than you did. Now, I know that's a big deal for me specifically because I didn't grow up with very much. And now I've got 3 children. I've got a 6-year-old, 4-year-old, and a 1-year-old, and I want to set them up for something fun in the future. I want to set them up so that way if they decide whether to go to school or not, to start a business or not, to invest for their future, their families or not, they have the means to do so. So I got to it personally, and I got to my computer, got to my phone, and started to Google what are the absolute best ways to invest, to save for a child. And here are some of the results that I got. I was told that one of the best ways to save for your child is to just put money into a traditional checking account. And while I agree that that would be a good way to save money for them, I wanted a little more maybe growth than just putting it into a same old checking account. Obviously, I can do that. I use a checking account in my own personal life, but just depositing the money there doesn't seem like it would return the same sort of value that I want to bestow upon my kids, right? So for me specifically, that one wasn't going to work. Google also mentioned to me, or the internet, the gurus out there also said that maybe I should look into a 529 plan. This is a plan that's specifically set up and designed for my child when they get to school age. Now, you can use these plans for private school and institutions like that, but generally speaking, these are used for college education. For me personally, I was looking for a plan that I could do more than just school, right? I want to be able to pay for that first car when they're 16 years old or help them do so, right? I want to be able to do school, of course, but I also want to have this plan after. I want to be able to maybe help them with pay for the wedding and how long can we go, right? Maybe help them retire, buy that first house. I don't know. And so for me specifically, it didn't make a lot of sense for me to choose the 529 plans. Also, in more research on those 529 plans, I realized that that's not a savings vehicle. That was an investment vehicle. And right there on the website of our state, South Carolina, it let me know that the investment wasn't actually even guaranteed. So for me, I've got to rule it out because I want to make sure that there's money there for the kids. I looked into trust funds. I looked into custodial accounts. I looked into the plan. These are all kind of government sponsored type of plans. And I just didn't see any plan that was fitting the criteria I needed. So I'm thinking to myself, what in the world should I do to provide for my family, to provide for my children to have a better financial future than I had? And then it came to me. Life insurance. Life insurance is what I should do. Now, I've seen a couple different examples out there of people who are purchasing life insurance for their children and accomplishing all sorts of goals. So, of course, I wanted to put that to the test. I wanted to see if I could accomplish, or how much I could accomplish with a one singular life insurance policy for my family. So what I did is I put together an example that I could show you of how if you fall into this boat, you too could put away money for your child's financial future. Not just specific events like college or like retirement, but all of the things along the way. So here's the example that I showed, and I'm going to highlight sections of it as we talk through it. So on my screen now in front of you, what you'll notice is that this is a $15,000 annual premium deposit. And this $15,000 deposit is going to go in for this policy for 10 years. Now, in my particular case, I mentioned that my youngest is actually already 1. And so if I were to start this policy on them, that the insurance company would list them at their next birthday, which is just about 2 years old. So that's why it says 2 there, but you're putting in $15,000 for exactly 10 years. And here's where it gets really, really fun. Really fun. Immediately when you start this policy, you are buying insurance. Now we're going to purchase the insurance so that way we can have access to cash value. That's the whole point of our plan. I want to be able to purchase stuff, buy stuff, take care of the family. But the fact of the matter is this private bank is built and instituted inside of life insurance. And what that means is the second that I purchase the plan, my son, my 1-year-old, is insured. And you can see that figure right there. It's $1.6 million right out of the gate. Not only can you see that it's $1.6 million right out of the gate, but you'll also notice that that number is going up and up and up every single year that this policy is going to be active or in force. I think that's cool. Now, you and I both know that people can go at any time. That happens all the time, right? Sometimes it's accidents. Sometimes there's health issues. I do not know what's going to happen to my son. Now, hopefully he lives a long life, but just in case he doesn't, I definitely am going to need this money, my wife and I, so we can grieve, so we can be at the house for a while, so we can fly the family members out and grandma and grandpa to come hang with us, and be with us in that time. So for us, that's a really big, important deal that we still have that death benefit associated with this policy. But again, that's not why we're here. We're here so that if everyone is happy and healthy, we've got plenty of resources, this kind, in order to accomplish the goals. So what you'll notice is we can take a look at the cash value as this policy builds. That's this column here, the cash value. Now, this is the guaranteed cash value. Yes, there are cash value differences from company to company. Sometimes people on the internet like to highlight what's guaranteed. Sometimes they like to highlight what's not guaranteed, meaning what's added on from that particular company. In this video, I'm going to focus on what's guaranteed because that's what's most important to me. I think that the ability to put this out, print it out, put it on your fridge, and sleep well at night because you know that the dollars are coming is more important than what could potentially happen if everything goes your way. That's another reason why I did not personally for this case study, look into something like an indexed universal life insurance policy. For me specifically, I don't want too many ties to the market. I don't want my money going up, down, left, right. I don't want the cost of my insurance policy increasing as my child gets older. I don't want fees and penalties and all that. And so for me, I just didn't look into index universal life. Whole life is the way that I want to go because the cost is fixed. The death benefit rises, the cash value rises each and every year, and I designed this policy so that I and my family would have lots and lots of money when my kids were of age. So as you can see, the cash value starts to grow right down this column here. And by the time that my son turns 16 years old, we've got over $200,000 that we can use to help him accomplish a goal. Now, at 16 years old, what normally happens around this time, right? Think about it. At this time, what normally happens, 16 years old, is they start asking for less and less rides around town because they want to purchase their own vehicle. And so here's my question for you. Would anybody in their right mind drive down to Wells Fargo or Bank of America when they have their own private banking institution in front of them with access to $221,000 that is, let me repeat, private, meaning you don't have to worry about this being reported to Credit Karma or on your credit report, unstructured, which means you are not required to repay this money on any sort of frequency. Now, you might want to repay, and I'll teach you to repay, but you're not required to, meaning no letters, no emails, no calls, anything coming like that. And again, you control the entire terms of this loan if you decide to take it from your life insurance. I think understanding the control aspect of this private bank institution, that a lot of people would choose to use the money that comes out of this policy as opposed to going to those third-party creditors and third-party banks that we always go to. At $221,000 in the policy, now I won't be using all of this to purchase that vehicle for my son, you can believe that. But more than likely, I'm going to have the ability to help my son purchase that first vehicle and or purchase it for him, just depending on what type of vehicle they're trying to get, right? Sometimes these kids try to do a little bit more than they should. Now, here's where it gets fun. Unlike some particularly government-sponsored plans that are set up specifically to accomplish a goal, I mentioned the 529 earlier in this video. Unlike that, where you'd have to use the money for school or be penalized and taxed if you do not, unlike that, we are not forced to use this money for a vehicle. So maybe at 16 years old, your child doesn't want a car and they want to go study abroad or go on that big trip with their friends or whatever it is. You can use this money for that. And the policy continues after that. So I've got highlighted for us here just a little bit. On this side of the screen, I've got the policy as it continues. So let's make it past 16 with that $221,000. And let's say the next year or two, they're headed off to college. Well, again, you can have and use these funds in order to do so. Now, I don't know if the school that your child might want to go to costs $20,000 or costs a little bit more than that each year. The point of the matter and the fact of the matter is it doesn't really matter. Doesn't really matter. You can send them with over $210,000 in the policy at the time that they want to go to school. You can almost send them to any school that they want. Now, again, within reason. I'm not saying that if the school costs $300,000 that you've got the resources to do it. I think you guys are understanding that. But more than likely, with the funds available in this policy, you're going to have the ability to help them pay for school, maybe pay for school themselves, maybe pay for a year or two, just depending on where they want to go. Unlike, like I mentioned, particularly goal-driven plans. You know of these, 401ks, IRAs, right? They're called individual retirement accounts, IRAs. 529s, I've mentioned specifically for school. You can use this policy to do anything you want. So not only can I buy a car a couple years prior, I can now use the money to go to school. Look at our cash value that's still increasing each and every year while we're pulling $20,000 out to go to school. You'll notice that the cash values here each and every year aren't dropping by the equivalent $20,000 because we've built our private banking system, this financial future for our children, inside of a life insurance plan that has ever increasing guaranteed to you cash value. So even as I'm pulling $20,000 out, I'm still earning on the money that was contributed all those years ago, on the dividends that are given from my policy, which I'm not even showing in this diagram. But like I mentioned, life continues. Your children's life continues. Finances continue. Bills continue. And all of a sudden, let's say that this child wants to get married. Now, I don't know about you, but in my house, I'm going to do my best to be around and to be helpful in that category because weddings can be expensive. I don't know if your child's going to plan a $30,000 wedding or higher or lower than that. But what I do know is that after we've bought a car, after we've paid for college, by the time that they want to get married, in our example, there's an additional $200,000 that's ready for them to have and take. So not only can we take as much as we need to help them pay for that wedding, again, help them pay for it, pay for the whole thing, completely up to you, but we still have an ever-increasing asset, a private bank, a policy that's growing and growing each and every year. I've got one more example on this sheet, and I think it's fun to talk about because, again, let's go through with our example here. You've got a child, they've got cars, they went to college, maybe they're married now, and now they want to put a down payment on a house. And so you have the funds to be able to help with that. I don't know what that looks like in your situation. I don't know if that's a situation where you, the parent, own the home, and now your child pays the mortgage payment back to you. I don't know if that's a situation where you just gift or loan them the $40,000 to do the down payment. I don't know if that's a situation where you combine the two. Who knows? The point of the matter is, at the time that your child was interested in the house, we've got a bunch of money to help them do so. See, this is a policy that started, if you remember, with 10 payments of $15,000. 10 payments of $15,000 into this policy. You stopped paying for this policy when your child was 11 years old. It's done. This is before you've bought the car, before they've gone to college, before they've gotten married, before you've helped for the house. You've been done paying with this policy, but the proceeds, the cash value, continue every single year. That's what makes life insurance, in my opinion, one of the best places to store money. Now, let's not get it twisted. Inside of life insurance is not an investment, meaning there's no risk of your dollars ever decreasing inside of life insurance. Whole life insurance, that is. There are some other life insurance products out there where you can have that ability where your dollars decrease. Whole life is not one of them. It was amazing to me that as I Googled and researched where's the best place to put money for my child, insurance wasn't mentioned. All the other government-sponsored plans were mentioned. The conventional banks had lots and lots of pages and input on where you should put your money, but I didn't see life insurance mentioned on those simple Google searches and in a little bit of research that I did. And I think that's very interesting. Let's continue. The policies continue because your child's still alive and kicking, and so that means you can continue helping your child accomplish those goals. Last thing we looked at was that $40,000 for the down payment on the house. And let's say that now your child is about 46 years old. Maybe they've got some kids of their own that are reaching 18, 19, 20 years old. So you want to help pay for college for their kids, maybe for more than one. Look at how much ability you have to influence the next generation with those cash values because of the decision you made early on or now to place your money where you placed it. Isn't that interesting? What I want you to do is sit at home and I want you to think for just a moment. Do you have this type of impact anywhere else you might place your dollars? If I chose to place my dollars in a conventional savings account, which is what the internet told me, would I have the ability to have ever increasing cash flows each and every year with only making the deposits or contributions into that savings account for 10 years? No. The internet told me that maybe I should look into health savings accounts as a good place to store money for my children. But my question is, aren't I limited in those health savings accounts to only pay for things that are health related? Aren't I limited in 529 plans to only pay for things that are school related without penalties and taxes? Aren't I limited in those retirement assets, those retirement vehicles, to only take or use that money after my child has hit a certain age, right? To help culture and cultivate their retirement. But inside of life insurance, there are no such parameters. Not only that, I'm not required to continue payments for the child's entire life. I'm not required to assign what the money is earmarked for up front. None of those things. This is all private. This is all dictated and determined by what I want to do and the way that I want to help my family. Oh, and don't forget, just in case anything happens to your child, there's a big death benefit coming to your family when that happens. It's not an if in whole life insurance, it's a when. And when it happens, there's a big death benefit coming your way as well. When I look over the internet, when I started to search, when I think about my family, my 6-year-old, 4-year-old, and 1-year-old, and I think about what are the best ways that I can help them get ahead? What can I do now to make sure that they have an everlasting, a fun financial future? The first thing that comes to my mind is life insurance. Hopefully this video helped you understand that we believe here at the Cash Compound that there is no better place to put your dollars to help your family than inside of dividend-paying whole life insurance from a mutual company. Here at the Cash Compound, we do two things. One is help you set up those policies. So that way you get a policy that works the same as mine. So you can count on it, print it off, put it on the fridge, and know you have guarantees for a better financial future. The second is help you use that policy after you get started. If you're looking for more information or are interested in having us walk or talk you through a situation that looks similar to mine, then all you got to do is click the link in our bio. We'd be more than happy to chat with you. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.